Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method. In this webinar, I will be showing you and teaching you how to identify key Fibonacci levels, what makes Fibonacci so different, and why Fibonacci is the only predictive tool in the market that you can use on any instrument, any time frame, any platform. First, I hope you will read US government required disclaimers and recognize never trade with risks you cannot afford. And remember, everything I do in this webinar, I do for education purposes only. So, what makes Fibonacci so different? Until 2008, I invested strictly on fundamentals. Until 2008, I listened to CNBC and I paid attention to earnings. 2008, I was holding stocks that had stunning earnings, solid fundamentals. Here's the example of one of the stocks, Chesapeake Energy. I kept listening to CNBC, I kept reading Investor Business Daily, when everybody kept saying exact same thing. Hold your positions. Good thing I stopped listening. I realized, as I started paying attention to the price, that there is a lot more to the story. I realized very quickly that if fundamentals and earnings worked, everyone would have been Warren Buffett. By the end of 2008, I developed my own method, studying price and Fibonacci only, something that had been a hobby since 1990s, since 2008 until now became full-time work, a lot more than full-time work, nothing but price action and Fibonacci methods. And this is what this webinar is all about. Every single level in front of you is proprietary Fibonacci level I developed in 2008. Levels that has drastically more accuracy than earnings, fundamentals, or indicators will ever give you. Here is the example. 2008 reversal zone reached. Good idea to exit the position. It doesn't matter if you day trade. It doesn't matter if you use long-term positions. Formula remains the same. Every single one of these levels applies to any instrument and any time frame. Fibonacci and price action the same everywhere. Here is the example. Here's a day trading chart from our trading room. This is all you ever see. This is the magic to the market. This is the alphabet of the market. If you can learn how to read this, you can trade anything. If I just remove the name from the chart of the instrument, you will see very clearly. It doesn't matter what the instrument is. Price remains exactly the same. Instrument looks exactly identical. What instrument is this? Why would that matter? You master this, all you have to do is identify what you want to trade. The only difference is instrument volatility based on instrument liquidity and time you hold the instrument. This is oil. This is not S&P. But formula remains the same. If you found the strategy that works, it should work on any instrument and any time frame, no matter what you trade. And what makes Fibonacci so different is Fibonacci is the only predictive tool in the market. Fibonacci is the only natural tool in the market that shows you far in advance where price will reverse. Here's a chart from our trading room where I demonstrate the method on S&P E-mini that's been present in the trading room for 6 years. Since 2011, bullish rally took off from this hot pink line. Exact same hot pink line we're witnessing in a trading room each and every day. Because this is crucial Fibonacci support. that identifies the end of the minor trend. And this is what price does every time. This is how market moves, no matter what you trade. And this is exact same chart that you can use for your investment decisions if you are holding position for a couple of months or a couple of weeks. This is a chart that's been present in our trading room since 2014, where price spelled out very, very clearly that this is Fibonacci reversal zone. This is where price bounced from in 2016. This is where price bounced from in 2015, in 2014. And when bullish rally took off, as you learned in the first class, bullish rally spelled out this is where market heading to. If you browse YouTube videos, if you browse a blog going back years ago I said market is heading to here. Years ago. And I said years ago, this will be crucial Fibonacci resistance, exact same hot pink line. What chart you use? Absolutely your choice, as you will witnessing on multiple other examples. Price remains the same. You learn how to trade price, you learn how to apply Fibonacci, you will never need to trade anything else. Here's the example of our day trading chart. This is where our bias remained bullish. Long time ago, on February 27, on February 28. This morning also another long trade. And this is where I said market is heading to. This is your retail chart. This is a chart you use for your day trading decisions. As Fibonacci said days in advance, if you're a day trader, where price is heading to. And that's what separates Fibonacci from all the other indicators. Formula remains the same. What you trade is your choice. And that's the key to proprietary method. Enter price, exit Fibonacci, using the rules that you will see later in the webinar. Absolutely no software, absolutely no indicators of any kind. Rule-based method that helps trader with discipline and keeps trader out of trouble. Here's the example of Apple. Looks familiar? 2015, Apple had stunning earnings. 2015, Apple was at reversal zone. Identical level where S&P reversing as we speak right now from 2400. Identical formula. Stunning earnings and Apple collapsed just like S&P Chesapeake Energy in 2008. 2016, Apple had the worst earnings in 13 years, an exact same hot pink Fibonacci support. Apple rallied as expected. And that's what happens every time. And that's how you stay out of trouble. And that's how Fibonacci helps you discipline. As this is a chart that's been present in the trading room for years. As I will take you back years ago, where I said this is where Apple will rally from. No surprise whatsoever, no matter what the earnings are. So, Fibonacci is naturally predictive tool in the market. Fibonacci is present in everything that surrounds us. Look around in nature, look in reflection in the mirror. You see Fibonacci. You see mathematical sequence at present in everything, including markets. Fibonacci can be applied to any instrument, any platform, any time frame. If you choose to use indicators, you are only human, because indicators make you believe that pushing a button on green light, that having chart with flashing colors will make it easy to make a living. Somehow it doesn't work that way when you come to the markets. Somehow indicators are delayed. Indicators are artificial. And if you're lucky enough to find the indicator that works, more than likely it works only on certain instrument, certain time frame, certain platform. And more than likely, if you found indicators that work, you have to pay fees and you can't change the platforms. So, Fibonacci works always. Fibonacci stays with you forever. Fibonacci is the only predictive tool. Indicators not. Nothing in common. So, when I have traders who come to me and say, I tried using Fibonacci, I tried plotting Fibonacci, but it didn't work. No wonder. How can it possibly work if you don't know the rules? I don't use Fibonacci circle. I don't use Fibonacci time extension. I will never even try. I never spent years studying those. However, years and years of work, 28 strategies later, hedge fund traders, beginner traders who trade the method with incredible success in US and globally shows if you know the rules, if you know what appeals to you, your account size, your risk management, all you have to decide what you want to trade. As this is what gives you highly accurate profit targets, as this is what keeps you out of trouble, as this is what applicable in day trading and investment positions, as this is the key to alpha wave trader method rules for Fibonacci retracements. No Fibonacci extensions, no Fibonacci other tool, rule-based method with Fibonacci retracements. And that's the key. Rules are the following. Every single time price show you where the entry is, which you will see. Price repeats exact same formula time and time again. Using fixed stops and speculative entries will not work. This is the price, this is what you use for your stops and your targets. If on this day you used the stop for 1 point, it did not work because the spikes on S&P were very, very sharp. As you can browse videos on YouTube, you will see every single trade, different stop, different target. You choose your trades carefully based on risk management appropriate to you and your account size. So, this remains the key. Price for entry and Fibonacci for exits. Indicators always give you the answers after the fact. That is constant, never predictive. Every single indicator uses this to build the indicator. Every single time I worked with software developers or programmers, this is what they look at and this is what they ask me questions. Certain mathematical formula applied, and after the fact, only after the fact, indicator will show you where your entry should have been, never before. And this is what typical chart look. If chart is blocked with endless indicators. This is a chart of one of the students who'd been trying in trading for 20 years. Big investment into indicators, not big investment into knowledge of the markets. So, no indicators whatsoever, only pure price and Fibonacci. What makes Fibonacci so unique and so different? Fibonacci is a natural sequence. Fibonacci is present in everything. And this is the formula. Every single one of these numbers creating the golden ratios that surrounds us in everything. Every single one of these numbers give you the answer to the next move. If you add 0 and 1, you will create a subsequent Fibonacci formula that moves the markets as market preset by these numbers. And this remains the key. And this is what I teach each and every day. And this is what hedge fund trades, and this is what beginner traders trade on any instrument. This is basic market structure. This is what market does each and every time. No matter what you trade, no matter if it's Google monthly, no matter if it's S&P 5-minute chart. So, knowledgeable trader understands extremely well. The most powerful point of entry at the trend inception, Fibonacci wave 1. Knowledgeable trader understands that trading counter trend wave 2, not an option. If you will start trading wave 2, if you start trading against the trend, such as an example, if you've been trying to short this market, nothing good is possible unless price comes to reversal zone. So, your key point of entry always and forever, trend inception, wave 1 and wave 3, nothing less, nothing more. Price comes to reversal zone, you exit the position. If you start buying market at the wave 3, you are in serious trouble. You buying into reversal zone. So here's a chart from our day trading room. As you can see, bias at the bullish trend inception remained long, short only high. Bias at the bullish trend inception remained long. This morning once again. Price comes to reversal zone, you do not enter the position. No matter how spectacular and powerful bullish rally is, it will reverse completely 80–85% of the time. And this is what price does, no matter what you trade. No matter if it's Apple, no matter if it's gold, no matter if it's oil, no matter if it's bonds. Here is the example of the chart of one of the funds I work with who spoke today in the trading room. So, let me remind you where gold was last year. This was Fibonacci reversal zone, chart present in the trading room for years. This is what I said last year in February 2nd, that I absolutely expected bullish rally to go to drastically higher levels on gold. Here is the post, February 2nd. Gold is heading to 1300. No surprise. When gold was at 1100, when gold was at reversal zone. Bullish rally on gold had ended at this reversal zone. December 2016, brand new hedge fund I started working with. Joseph signed up for the course. He acquired position here. This is his exit point. I asked him if he wants to make a decision and continue his position. After everything he learned in the course, he realized very clearly he doesn't want to stay through any more pain, knowing quite well price is heading higher. But this is a key Fibonacci target you learn in the course. This was trend inception entry at 1140. This is the exit. Exact same formula remains on S&P. Exact same levels present in the room for years. Price the same everywhere. Only difference, how long you holding position. Only difference if you choose to be a day trader or position trader. This is what market does every time. Nothing less, nothing more. So, here is Nasdaq, exact same formula. Price came to reversal zone and Nasdaq collapsed. So, what is the most crucial structure in the market? Wave 3. It's all about wave 3. Wave 3 is always present. No matter if the trend is minor, no matter if the trend is major. Here is an example. Here is oil. If you browse YouTube channel, if you browse my blog, you will see very, very clearly why I love bringing oil news to the trading room. If you witness and pull up the news on oil, every single one of these levels, every single one of the times in the months of January and February, news on oil was bearish, extremely bearish. And all I can say, respect news due to volatility. This is Fibonacci reversal zone. Do not short near. Bullish rally 300 points. Bullish rally 300 points. Bullish rally 500 points. Last 2 weeks, bullish news on oil, and what do I say? Do not buy. This is Fibonacci resistance. This is oil hourly, exact same level as gold monthly, where a fund manager who learned the method exited the position. And this is where S&P broke through this level. Second target on weekly. Exact same formula. And this is what bonds are doing currently. Bullish rally from this reversal zone struggled to break through this level. Chart present in the room for years. No surprise where bonds collapsed from. And that's what price does on every instrument and every time frame. Knowing where to enter your position remains the key. You cannot enter trigger randomly knowing that price heading higher. Will not work. Risk management is everything. Knowing where you're placing your stop is a key. This is the bullish rally of the century, traders. And this is picture perfect reminder where it came from. If you were excited about the election, you were excited for this reason. 2016 was my favorite event of the year. Days and weeks before the event, we discussed with students, it did not matter who will win the election. The only thing that mattered, if price at reversal zone, your bias is bullish. Hedge fund convention day after the election, and I'm listening to fund managers shorting this market. It was quite funny and quite sad. That's why hedge fund managers taking the course. That's why Fibonacci is a major buzz on CNBC, Oppenheimer funds. It's becoming very, very clear. Trading on the news, trading on fundamentals does not work. This is the rally of the century that started when Trump won the election, as we expected. And this is when price spelled out. This is where market heading to. And this is where market is now, as we discussed in day trading room. This support is respected. You are not shorting this market. And here we are at reversal zone. How many points did S&P collapse, traders, when price came to reversal zone on hourly and daily? Anyone surprised? Should not be. This is oil. This is S&P. Absolutely expected. 7 points. And that's how you trade. You do not buy into reversal zone. No matter what you trade. No matter if it's Apple, no matter if it's gold, no matter if it's S&P or oil. Again, S&P is heading to 2500. But as I said, at 2400 we're going to see some hiccups because this is reversal zone. Larger the time frame, more powerful the volume. Every time I work with institutions, every time I work with hedge funds, we use weekly and monthly charts. Weekly chart, by far my favorite chart. What you trade, absolutely up to you. So, Fibonacci spelled out years in advance, where it's heading to. All you have to do, play by the rules. So, wave 3 on oil in a progress. Key Fibonacci support respected. This is a chart that will remain in a trading room potentially for weeks and months to come. If you pull up the video that's already posted on YouTube channel from our trading room, before oil news I said, I don't care what the news is. 54.50 will be a major problem. And here is oil, collapsed 100 of points. As this is wave 3. No surprise whatsoever. Market is not complicated. If you can count to 5, if you can spend with price and Fibonacci, you can trade. Euro hourly, that's reminding you, bullish rally ended at Fibonacci resistance and reversed. Same formula. Oil choppy reached Fibonacci resistance and in pain. Google, flawless 5-wave structure. No speculation of any kind. Rule-based method. Price for entry and Fibonacci for exits remains the same. So, since 2011 I worked with traders from beginner to hedge fund trader and teaching exact same thing that I just shown you now. We go into details in the course. Details are everything. Rule-based method, price for entry and Fibonacci for exits. Focus, trend inception and trend reversal. If you can manage your risks, if you can buy and sell at trend inception and trend reversal, that's what trading all about. So a lot of exciting things happening in the next few months, and here is my favorite part. If you click on testimonies, you can see what students do. You can see their success stories. So here's Tashi. You can listen to him on the website. This is what he accomplished on his position trading since the start of the year. Here is his day trading account. Here is the curve. If you know anything about curve, you understand very, very clearly. It's all about risk management. So, and this is where students speak and share what they trade. So, listen to Tashi, listen to Sam, listen to others who trade any instruments in any time frames. Sam is a legend in the course. Sam will be attending bootcamp with Tashi. So, I highly encourage you, pretty please do listen, because very, very few people survive what Sam went through, war in Syria, and the success he accomplished and what he does now. He will be speaking in a bootcamp. So, this is what we do in the months of March, traders. The event that happens only a couple of times per year. Bootcamp. We're closing everything. The only place that will be open is a bootcamp room. In a bootcamp, we concentrate on learning Fibonacci in intense day trading environment. We will be looking on long-term instruments as well, as this is rally of the century, is it giving you opportunity on multiple commodities, stocks, long-term. Bootcamp is not the event that happens in the months of May, in the months of April, in the months of June. Bootcamp is not happening anytime soon. Tashi coming for the 5th bootcamp, William coming for the 10th bootcamp, graduates coming back for the bootcamp time and time again, paying extra. As a new student, you're not paying anything extra for the bootcamp. Bootcamp part of the course. If you take course with the bootcamp, you learn more than ever. And that's the key. So, any questions, please do ask. This is all I have, traders. This is all I would like to share with you in this webinar. Your questions is always the most favorite part of the webinar. As price for entry and Fibonacci for exits, it's all that matters. No software, no indicators of any kind. Pure price, pure Fibonacci. You can trade and place it on any instrument, any platform you will choose. So, ladies and gentlemen, your questions, please. This is what students say. It's indicator detox course. Anything you would like me to analyze, pretty please just simply post the instrument of your choice and time frame of your choice next to it, and I will gladly show you what to expect next. No software, ladies and gentlemen, this is what this webinar is all about. As you saw on the previous slides, as I spoke about, no software, none. It's an indicator detox course. Brainware, not software. This is what it's all about. Facebook, excellent question. Again, pretty please post the time frame you would like me to analyze. Very, very different if I'm looking on Facebook hourly versus Facebook yearly. Are you holding position for a couple of days, a couple of minutes, or years? That's very big difference. So let me show you already, as I already set up the Facebook on long term. And let me explain to you why you never use word daily on your chart. You cannot be profitable if you use word daily on your chart. Facebook is heading to 145. 145 is hot pink line, as you saw. Very crucial resistance. Knowing what to do with your position on Facebook is crucial. Bias on Facebook remains bullish. 145, Facebook will show a lot of pain close to this area. It's institutional resistance. All the classes taught like you see right now. You witness everything live and you ask me questions just like you do now. Any other questions about any other instruments, please do ask. The course is 8 weeks, private mentoring 16 weeks. If you're considering signing up for private mentoring, please speak with me first. Some of the days are booked until summer. Bootcamp included at no cost. Cost for the bootcamp $888. Graduates paying extra. If you're signing up for the course in the month of March, bootcamp included. 8 weeks group course with daily classes with intense bootcamp $32.77, private mentoring $79.99. Private mentoring 16 weeks with annual follow-up. Private mentees become my dearest friends for life. A lot of students who walk through the bootcamp finish the course in 2 weeks. Course is ongoing, bootcamp is not. Bootcamp is the event that happens once or twice per year. Only limited group is allowed, 5 spaces left in a bootcamp. So, any other questions as I'm bringing up to you Facebook daily? So if you're looking on my chart, as you can see very, very clearly, I'm not using word daily, I'm using 1440 minute. You cannot use word daily on your chart. This is next level on Facebook, 140, if you are trading daily. As long as 133 respected hot Fibonacci support, hot pink support, that's exactly why I made it this color, that it can never be ignored. Bias is bullish. You do not want to short Facebook. Next resistance 139. Very important Fibonacci target where you should take profits off the table if you've been buying Facebook at trend inception. You do not want to buy Facebook near these levels. Bullish rally overextended. Any other questions, traders? Please do ask. This is how Fibonacci keeps you out of trouble. If you know where these levels are, you never short near. If you know the rules, you know where to exit. And that's what played out in the markets last month. All the trades from the trading room. And this is where S&P is now, at reversal zone on hourly. And this is what we looked on S&P weekly and monthly previously. That's where ES is heading to next. if you're using S&P index fund, if you're utilizing options, as many students and graduates do. So, excellent question on Euro. Let's walk down memory lane on Euro, shall we? Here's a chart on Euro in 2014. Remember Euro 3800, remember reversal zone? Did you short Euro at this level? No surprise whatsoever. Before I left on vacation in 2014, I said 3400 next, crucial Fibonacci support, taking Euro a couple of weeks to break through this level. This is very important moment, please listen. This is chart on Euro from 2015. Hot pink Fibonacci support. I said, this is crucial Fibonacci support. I said, Euro is heading drastically lower out only when support is broken. I also said exact same thing about pound. None of us knew in 2015 about Brexit. Pound already broken through this support. Pound already broken through second target. Pound is heading to 1-1 because of Brexit. Euro is in free fall. It's all about this hot pink support that's causing a problem. Euro exit is next. I expect Euro to tank completely. Brexit is the only reason pound collapsed a lot quicker. And again, it's exact same level where Apple rallied from. And that's where we are. And that's what price does every time. So, you knew Fibonacci levels. You've been shorting Euro at 3800. And that's where S&P is heading to. Fund will begin long term at 24,500. Short term, we're having problem at 2400 today, as expected. So, Chesapeake Energy, CHK 1440, coming up. Valiant, Magic. As you'd probably heard about my posts and my articles about the Valiant. Let me show you when I work with hedge funds where this is posted. As what I said and what I published about the Valiant in 2015. One second, please. Let me find the post. Going back here. Here's a post on Valiant. Looks familiar? November 9th, 2015. Short every rally. Multiple articles written since, as I could not comprehend how anyone cannot see this. This is what Valiant had done. This was the reversal zone at 260. And that's what I said. I expect Valiant as a company not to exist. Short every single pullback. And I'm remaining firm. Buying Valiant, the worst idea ever. Short every bullish pullback. Nothing else to be said or done. And I knew that in 2015. And that remains firm. So, what you trade is your choice. Fibonacci is the only predictive tool in the market. And that's what separates knowledgeable trader from trader who is using delayed indicators. No reason to do that. So, if you would like to join us in a bootcamp, you will never use indicators, I promise you that. You will see that market is flawless Fibonacci puzzle. All you have to do, identify what's appropriate for you, your risk management, your account size, and apply the method. You want to be day trader? You want to be position trader? Why not? A lot of students do that. A lot of graduates do that. Simply play by the rules and trade what you can afford to trade and what speaks to you. So, few more questions and we are out. So, the question about CHK daily coming up. Any other questions, traders? Pretty please do post. So pretty please do monitor your inbox. For trading room invitation and newsletters. This is Chesapeake Energy Daily. This is where Chesapeake Energy collapsed from. As you could see, Chesapeake Energy Daily respected Fibonacci support for days. Many days, actually an entire month. Just to show you the parallels between all the other instruments. This was S&P monthly. Remember decision point 2, crucial Fibonacci support. Remember gold weekly, crucial Fibonacci support, point of entry, and now the exit. The same exact formula as I spelled out a couple of times. Bootcamp included in the cost of the course. Course is $32.77. Bootcamp included. Graduates paying $888. That's the cost of the bootcamp. New students, $32.77. Bootcamp included. Savings of $888. All posted on the website. So if you have any questions, please review the information and feel free to contact me. Everything on the website posted under Learn. If you ever have any questions, do not hesitate to call or email me. And always, most importantly, please listen to the students and what they trade and how. As method applies to any instrument, any time frame. Doesn't matter if it's Chesapeake Energy, doesn't matter if it's VXX. Let's take a look on VXX, as it's also the darling of the hedge funds. So, and as I worked with hedge funds, as I've been asking about VXX. Here is VXX, and here's a picture perfect reminder. Exact same decision point 2, an unforgettable Fibonacci resistance you never want to enter near. This is your channel right now. This is your support and this is your resistance. So if you know the rules, you buy low and you exit here. This is a channel VXX may be stuck for a long time. And that remains the key. Knowing where to enter, knowing where Fibonacci is, absolutely crucial, no matter what you trade. Any other questions? Please let me know, traders. Please do not hesitate to contact me. info@fibinstitute.com or 925-257-4298. Fibonacci is always the favorite time of the year, March 13th through 24th. Look forward to seeing you there. We have only 5 spaces left. Thank you so much for your time. Have a fantastic afternoon. Look forward to seeing you trading room. Again, please keep an eye on your inbox, as well as please check your spam box just in case, and add the email to your allowed list in order to continue receiving invitations. Thank you, traders. Thank you so much. Have a fantastic afternoon.